Hey traders, Jason here from Leavitt Brothers. This is a quick video about some recent trades. All right, the market has improved a lot lately. The indexes have been in good or great shape all along. Okay, some of the indexes at their highs, some of the indexes like in the middle of ranges. So they're either been in really good shape or great shape. But there's been some weakness beneath the surface in the form of some of the internals declining and some severely lagging stocks. Okay, but things are improving. Stocks that suffered big losses have perked up and offered some entries. So let's go through some of them. All right, so here's Dash. This is the daily chart. Okay, you can see the stock broke out here. Moved up, came back down, tested the previous breakout level, plus tested the 21 EMA, which is the orange line here, and then it moved up. So let's zoom into this area with the hourly chart and see what kind of entry we can get. Okay, so here's the hourly, and you can see breakout here. Okay, stock comes up, comes down and tests, and then continues on. So what I see here is on the initial move up here, let me get rid of these lines. So on the initial move up here, the MACD crosses. On the test down, the MACD stays in positive territory. It stays above the signal line. Okay, and while it dips, you get the stochastic cycles down. Okay, so you get an up, down, up sequence, and you get on the first move up, you get a cross. On the move down, the MACD stays in positive territory while the stochastic cycles down in signals an entry, and then you get a continuation of the move up. Okay, so the MACD is the trend on this time frame, and the stochastic is used as a timing mechanism within the trend. Okay, I talk about this in my masterclass. This is one of my favorite setups. All right, let's go to the next one. So here's Copen. Okay, it broke down. Okay, there was support at 8. It broke down, but then recovered pretty well. Okay, and once it got back above 8, which was essentially getting back into, this range here. Okay, you can see it dropped out of the range, but then immediately recovered. Once it got back into the range, then we start looking for a trade, because then we start to think that, like, hey, maybe we could get a trade up to the middle of the range, or maybe possibly to the top of the range. All right, so let's zoom in with a 60-minute chart and look in this area for an entry. Okay, so here's the 60. Okay, and you can see here, steady downtrend. Stock moves up. You can see it first gets support at its 8 here, gets rejected by the 50, which is pretty normal. Okay, because if it's gonna have an extended move down like this, it'll get above the 8 and 21 on the first attempt, maybe just the 8, but it's probably going to get rejected by a higher time frame, not a higher time frame, but a longer moving average. Okay, but as long as minimal damage is done on the subsequent pullback, the stock's going to be playable. Okay, so what we got here is stock moves up. Get rid of these. Okay, stock moves up, MACD crosses up. On the minor pullback here, the MACD stays in the up position while the stochastic cycles down. So again, the MACD is the trend on this time frame, and the stochastic can be used as a timing mechanism within the trend. Okay, so as long as this stays up, we can use dips with the stochastic to time entries, and that's exactly what happened here. So we got some good entries over here, and then we got to move from 8 up to 9.5, which is a perfectly, on a percentage wise, that's a great trade. And of course, timing wise, it's 1, 2, 3, probably 4 days. Okay, so to make 15, 16, 17% in 4 days with a simple setup like this, that's perfect as far as I'm concerned. All right, next one is NET. Okay, this is a daily chart. So you can see the stock broke out here. Okay, moved up, huge volume here, came back down and retested, and then moved up again. So what we're going to do is we're going to zoom in over here and see if we can find an entry. All right, so here is the hourly chart. So you can see the initial, you see a breakout there. Stock comes up, comes back down, finds support at the 21 and the 50. Okay, the 21 is the orange line, the 50 is the blue line, and then it continues up. So getting rid of those lines, you can see on the first move up, we have a cross from the MACD. And then on the dip, notice the MACD stays positive and the stochastic cycles down. Okay, this is what you want. Okay, I don't usually play the first move because I'm usually not paying attention to it. Okay, it usually comes out of nowhere. Stock is kind of weak. I'm not really that interested. But we'll have a big up day on, most likely or preferably on big volume, which will cause the MACD to cross up. And then it's the subsequent dip, which is minor, lacks energy. As long as the MACD could stay positive while the stochastic cycles down, this is the trend. This is a timing mechanism within the trend. Again, I teach this setup in my Masterclass, and as you can see, the stock was good for, it went from mid 70s to mid to high 80s. Let's look at another one. Here's NIO. Okay, stock triple bottomed 1, 2, 3, and broke out there. Volume wasn't huge. Whoops, volume wasn't huge, but it was steady. Okay, so let's zoom in over here and let's see what we can find as far as an entry goes on the hourly chart. So here's the hourly. Okay, and you can see that this move here, which isn't anything other than just a move up within a downtrend, crosses the MACD up. Then you get a move down where the MACD stays positive, but the stochastic cycles down, so that could be an entry. Then we get another move down where the MACD stays positive, but the stochastic cycles down. Okay, so the first move up had enough energy to cross the MACD up, and then the MACD stayed positive for all this time. It's like 1, 2, 3, 4, 5, 6 plus days. And while that stays positive, you get an entry here when the stochastic cycles down. You get an entry here when the stochastic cycles down. This is a little bit harder because you didn't get a full move down. Okay, but not bad for you to get, this move here puts it in play, and then dips within the trend become entries. All right, let's look at one more. Here is skills. So big move up, big move down. This candle comes out of nowhere on huge volume, and you can see it was a huge up day. Then the stock gaps up to here, which we want no part of. I'm certainly not going to chase that higher, but it puts it in play. Okay, it puts the stock in play. So we're going to zoom in with an hourly chart and see what kind of entry we can get in here. All right, so here's the hourly. Okay, you can see the steady move down, and then on this day right here, on the 21st, it was a huge up day, and then it gapped up right here the next day. So you can see the stock pulled back, got some support. Not quite, but support from the 21 EMA. It curled up and went. So the first move up here crosses the MACD up. On this dip, the MACD stays positive, and we get timing. We can time our entries from the stochastic cycling down. So as long as the MACD stays in positive territory, trends up, blue line above red line. Dips from the stochastic can be used to time entries. So this was good for, this move up, put the stock on our radar. This move up kind of pisses us off because we're certainly not going to chase it, but the stock comes all the way back down and forms this kind of bottoming pattern here, and we definitely get some entries there. Okay, nothing complex here. I'm not going to claim I have some sort of special proprietary indicator. I mostly use moving averages, MACD, stochastic. You could duplicate these setups because I don't use any special formulas, nothing proprietary again, no special parameters, and I teach this stuff in my Masterclass. So if you're struggling with trading, looking for a little bit of an edge, looking for something, you got to go check it out. It's available at a link below. And of course, if you're just looking for trading ideas, we do that at Leavitt Brothers. So I hope this helps, and I will see you next time.